Hello, everyone. My name is Jack Greenberg. I'll be your host today for the Small Cap Insights podcast powered by Darrow Associates. We are a leading full service investor relations firm that's focused primarily on micro and small cap equities. Joining us on today's episode is Peter Sidoti, the founder, chairman, and CEO at Sidoti Company. Peter, welcome to the show. It's great to have you.
Thank you, Jack. I'm glad to be on.
Of course. So just for transparency's sake, Peter and I were just talking a second ago, and he indicated that he would like to talk a little bit about the market in general. So,
All right. I think Jack and I were talking about the firm and describing the firm and what we do. We've been around long enough, and we can end with what we do. But I really think we're at a time right now where the market is changing,
mm,
and I think there's a dramatic change going on in the marketplace, and I'd much rather speak about that than what the firm is all about at this point in time. Because I think we opened up our shop 26 years ago, be 27 in March, and the world has changed, particularly in the world of small and micro cap stocks, and even in the world of larger caps. We have spent the last 20 years watching firms, underwriting firms through a consistent string of bad deals on Wall Street.
mhm.
Bad IPOs, bad secondaries, just bad product in general. And people often wonder why there's not a lot of demand for small and micro cap names among institutions or even among retail.
Mhm.
And my argument would be, well, after you've sold people businesses or sold a product that has lost money for 20 years, it's very hard to keep selling them new product. There was recently a conference out at LD,
Yep.
and the attorneys there were speaking about how to create new products to sell because it's hard to sell the old ones. In all honesty, it's hard to sell the old ones because they lost money
Yeah.
consistently. So the industry really has been built upon, in my opinion, for the last 20 years. There's not been a focus on quality, and there hasn't been a focus on return to investor. And that has both the underwriters have done this. That is also because of the way research is now funded. It's deteriorated the quality of research on the street, so that the research has no respect at this point in time. And I think it's really rubbing off on all of us who are involved in the business. It's interesting to me, but investor relations firms will often tell me that, there are two or three firms covering this stock. They have no interest in our corporate sponsored research product. Well, if you look at the firms who are covering that stock, in all honesty, their doesn't make sense. Their price targets don't make sense. The whole thing is really kind of a fraud in a lot of ways. And, our product is different in what we do. But again, what I find very interesting is there are very few people in the industry today who want a straight, direct, honest approach to it. The business and the profitability of the business has been built upon selling things that aren't necessarily good quality and continue to go through. We've seen this with SPACs. We've seen this with, what else have we seen? I mean, it's just been a flow of product that just has been amazing. So, before I speak about the business, as I speak about the company, I just want you to understand that in this environment, we run a very different company. But I understand, I'm not faulting anyone, but someday someone's going to turn a flashlight on this industry. It's going to turn a flashlight on the returns. It's going to turn a flashlight on the underwritings. And everybody's going to say, well, I knew that. Yeah,
Mhm.
everybody knew that, but they continue to scam money from the public in terms of where they are.
Yeah, it's very interesting you say that because I speak with a lot of investment managers that say, well, small caps have historically underperformed, but just give it a few more years, and then we'll be at that point where that's no longer the case and we'll outperform large caps.
Yeah. Well, guess what? Not unless you have better product. Okay. Not unless you have profitable companies that generate earnings, that have a return, that have real growth. Well, you don't have companies who are busy trying to pay their CEOs and CFOs a great deal of money, who are busy paying their underwriters a great deal of money. Their bankers, their lawyers, their accountants are all making money. in terms of where they are, and that the return to the shareholder is non-existent in where it goes. And nobody holds them up to a standard. To me, and we've never done this, but it would be nice if either the exchange or someone independently just would run 1, 5, and 10-year returns for the underwritings done by so many of these companies. All
Wow.
right. If you put that light on these companies, you'd realize there's no question why people aren't buying this product. There's no question why people have no confidence in this product. And there's no reason to disagree with them in terms of where it is. The Sidoti Family Trust owns a stock. I had a company put out a buy rating. We buy a lot of micro and small cap
Mhm.
product. I had a company put out one of these firms put out a buy rating on the company, and it was bankrupt within 3 weeks. I mean, it just doesn't make sense. And no one's holding a standard up to anybody in our industry in terms of where they are. And that includes everybody. That includes the brokers in it, the bankers, the accountants, even the IR people in terms of where they are.
Hmm.
All right. They're not necessarily pushing to the investor a good product. They're trying to push a story or trying to inflate things short term.
Sure.
There's nobody playing the long ball in this business right now. And I find it to be a real, I think it's got to change. I think it will change at some point in time in
So,
where it goes.
so with that in mind, what do you think separates Sidoti's product and research from some of these other reports that you're talking
What
about?
separates our product from everybody else is we get paid to do our research. We charge between $50,000 and $60,000 to a company to do our research.
Hmm.
Now, the interesting thing is people would say, well, that's a conflict of interest. I mean, you're getting paid to do research. We disclose we're getting the $50,000 to $60,000 to everyone. And I can honestly tell you, after over 40 years in the business, I'm not interested in blowing my name up or my firm's name up for $50,000, nor are my analysts interested in blowing their names up for $50,000. But other firms on the street, the research is being funded by investment banking,
Hmm.
which or potential investment banking. So you have analysts who are swooping in after fees of $1.5 million, $2, $3, $4 million
Yeah.
in terms of where they are. And the only thing being disclosed is they may be seeking investment banking activity. All right. There is no control on quality. There's no control on pricing. And in general, there's just no confidence in where it is. And Darrow would understand this as well as anyone. It's really interesting. When I started my firm, I was funded by Hambrick and Quest.
Hmm.
And originally, our name of our firm was Emerging Growth Research, which, by the way, there's a firm out there now called Emerging Growth, but
There is.
that was the original name. And one of our initial investors was Mr. Hambrick. And Bill, when he first came in, said, I've never seen a successful brokerage house that didn't have an individual's name on the door. All right. What I would tell you when you look at the brokerage houses today, the thing that separates us from everyone else is my name is on the door.
Hmm.
All right. Just like your firm, your own, the name is on the door. All right. I'm not interested in ruining everything I've built. I'm not interested in doing anything. I have, you know, I think it doesn't make sense to me. So as a result, we do real research. We do real fundamental research. We structure it correctly. We defend it in where we are. We don't put price targets on names of companies who pay us, and we don't put ratings rather. We put price targets on them, but we don't put ratings on them. We provide information and we provide analysis in terms of where we are. But if you want the fluff or make believe price targets that these analysts are putting out, it's just bizarre to me. And you as a young man must look at this and say, there's something not right here in terms of where it is.
So do you think a lot of those conflicts of interest arrive from those price targets or research analysts who want to appease management teams and continue to be paid
Absolutely,
that
because
fee?
the funding of that research today is primarily from investment banking fees.
Yeah.
Okay, and the payment for the research analyst is coming through the investment banking department.
Hmm.
All right. In 2001, 2002, Elliot Spitzer came in and crashed into research and created all sorts of havoc back then. Because in the dot-com era, people were just putting all sorts of crazy ratings on things in the bigger shops and where it was. All right. And back then, probably 60% of research was being funded by investment banking, maybe 50. Today, I bet you 90% of research is funded by investment banking, possibly more at most of these firms. All right. The conflicts today are far, far worse, far, far deeper than they were 25 years ago and where they are. Everyone knows it, everyone's looking at it, and everybody just, pretends it doesn't exist in terms of where it is. All right. It's just a funny thing.
So, $1 million question here. What changes need to be made fundamentally to address these problems? And
And the easy change is to have an exchange post 1, 5, and 10-year returns for underwriting transactions,
mm,
buy firm in terms of where it goes, or have some independent source fund returns on what takes place. You make those public, all right, it changes the whole scheme of the way things go. Okay. It would change it dramatically in where it goes because the buyers would have the information of where it. So to me, that would make the most dramatic change in terms of where it goes.
and so you said that the family trust purchases small and microcap stocks.
Yes.
Uh, clearly, clearly, you must then believe in some sort of future for the micro and small cap.
I love the business because, well, 80 to 90% of it's all air and hot air. 10 to 15% of it's real and legitimate in terms of where it is.
Hmm.
And it is kind of fun. I generally do not, purchase stocks that we cover.
Hmm.
All right. I don't like that conflict. I think it doesn't look well in terms of where it goes. But I can just tell you alone, we run 7 conferences a year. Generally, each conference has 40 to 50 names. You listen to those names, you listen to those presentations. There's always one or two real golden nuggets in that business that you get by visiting the companies. Okay. You find companies that are turning things around that have new management teams that have been bouncing along for a long time and suddenly are putting it all together. It's to me, you find some terrific turnarounds that people just don't know about in terms of where they are.
So are there any traits that you tend to find that these companies have in common, whether it be the management team is aligned with the
Generally, a
stock
couple of
price?
things. Yeah. One is that the management team owns equity in the company.
Yeah.
Two, because they own equity in the company, most of their compensation is tied to how the stock performs and not to their own base compensation. I can't tell you the number of money-losing companies I see where CEOs are making $2, $3 million a year
Mhm.
that need to be raised capital. All right. That's just where it goes. The third thing is the CEOs run a business, so they're generally cash flow positive. Their first job is to run a good business. Their second job is to take care of the stock
Mhm.
in terms of where it is. They're not consumed with worrying about what the stock does from one day to the next because they run a real business with real cash flow and where they are. So they're really proud. And, for the most part, they believe in what they're doing and they have confidence in what they're doing. So it really doesn't take that much to look at these companies and try to figure out where they are. A lot of them, from my standpoint, are companies that are turnarounds where the previous management has abused it or taken advantage of it. No, but it really is interesting in these companies. They all tend to underpromise and overdeliver
Yeah.
in where they are, but they know their numbers and they know their business. And it isn't someone selling a lot of smoke and mirrors or, you know, they don't want to be the next, meme stock per
Yeah.
se.
Yeah.
That's not why they're there. Okay. I can't tell you the number of people in the microcap business who just want their stock price up. They don't care if their investors make money or lose money. They just want them up in terms of where they are. I don't know. Again, we've had the pleasure of working with a lot of really good small companies over the years who've done well, but it's just different. And at some point, you know, the industry either it will have to turn and clean itself up
Yeah.
in where it goes.
So when you see a company that maybe reaches out to you for company sponsored research that you believe might be a little bit full of hot air, how do you
We
deal with
don't we
that?
don't do the business. The easy thing is, look, for us, a company comes to us who wants, usually, I can tell you three things about companies who come to us. The first thing is usually a company that comes to us, the CEO believes in his business.
Hmm.
Okay. Because you would be amazed at the number of firms that don't want real analytical coverage of their stock. Okay. They want you to do a fluff piece. They want you to value the company based on EBITDA, adjusted EBITDA. They want it to do revenue. All right. They don't want you to do a real piece in terms of where it is.
Yeah.
So by the time they come to us, they have to understand they're getting real research, and the CEO believes that he can withstand it. The second thing with companies who generally come to us is they know our record and they want what we do.
Hmm.
Okay. As I say, we don't put price targets on what we do. All right. We don't make stuff up. All right. That knocks out a lot of companies. A lot of companies come in and say, well, we want a price target on our stock. And we met with a company at LD, and the fellow says, well, I can't use you. I want a price target. But I said, your stock was $30. It went to 1,000, and now it's at 70. I said, what would you want? And you say the stock is worth 70. What would you want the analyst to do when the stock was at 1,000 in terms of a price target? Like, just tell me how that makes sense
Yeah.
and where you go. And the third reason companies come to us is generally because they know they have good numbers coming.
Mm.
All right. We work real hard looking at cash flow and balance sheets, and our research isn't being used to front run an equity offering or front run a debt offering.
Yeah.
All right. If a company needs cash, it needs debt, they can use another company sponsored research program, or they can go, usually if they need cash or they need debt, I can name three or four underwriters who will be more than happy to write positive research pieces for them. So they don't need to come to us anyway.
Yeah. I appreciate the candidness because many people would not be that straightforward in their answers, but
Well, I'm getting tired. I'm getting old in terms of where I am. But I am saying this, and as a young man coming into this business, I think there's a tremendous amount of opportunity here, or a tremendous amount of good companies. But
Mhm.
what's going to happen is there's going to be a lot of change.
Yeah.
Okay? You can't keep selling bad product to people and not expect that to go on. But with change comes opportunity. So
So
again, when I
on
would tell you, as a young man in this business, there can be nothing better. All right. You're going to have to figure out change becomes risk. So you'll have to figure out what to do. But I can assure you that it'll be fun to see where it lays out. All
no,
right. For you,
I
it's
definitely
fun. And for me, it's fun because I'm on the other side of it. But it will be interesting to see how this business evolves. And it'll affect every piece of the business. It'll affect the companies. It's going to affect legal, accounting, the underwriters, and the IR firms are going to be affected as well in terms
yeah.
of where they.
So last question, and on that note of opportunity, looking ahead, are there any sectors or themes you personally or Sidoti is encouraged by or you think is kind of underappreciated at the moment?
I just think there are a ton of good, well-run small businesses out there.
Yeah.
All right, and you have to go through a lot of what's it? You separate wheat from the chaff. There's a lot of chaff you have to go through before you find the wheat in terms of where it is. Okay. I There's a lot of good people out there. There's a lot of good quality out there. There's good things out there that are being done in terms of where it is. Unfortunately or fortunately, that takes time, and you're not going to make as much money as quickly as you do the other way.
Hmm.
But look, it's been the wild, wild west. It's been interesting to watch, really more from the sidelines. And I can congratulate all those who made all the millions of dollars that they made in terms of where they are. I don't think that that formula continues to work anymore. Okay. I think it's different.
No, that's great. This has been a really refreshing point of view, Peter. Thank you again for coming on the Small Cap Insights podcast. It's been great to have you.
Yeah, again, the world is changing and people have to change with it in terms of where they are. All
Mm.
right. And I think just like they have to separate out the quality of the people. You want to work with quality people. You want to work with quality IR firms. You want to work with quality research firms. All right. Who you work with reflects the quality of your company in
Yeah.
terms of who you are. Okay. And look, I think I respect Darrow a great deal. Okay.
Well, thank you very much, Peter. If you guys are interested in learning a little bit more about Peter and himself, his company, visit Sidoti.com. And we'll see you on the next episode. Thanks again, Peter.
I see. All right. We'll talk to you soon. Thank you.
All right,
Bye-bye.
bye-bye.